Let's stick with housing. Our next guest says this week's rate cut will spike housing demand, particularly from first-time buyers, but warns that could also drive prices back up. Joining us now is Noble Black, real estate broker at Corcoran. Noble, great to have you with us.
Thanks for having me.
Are you expecting rates to resume a downward sort of trajectory, even though we saw a spike right after the Fed meeting?
Who knows, right? I mean, I think we're certainly not going to see them fall dramatically from here, but hopefully they're going to continue falling somewhat. They're going in the right direction overall. I think the Fed cut today certainly sent kind of a boost of confidence is what we were hoping, what we were somewhat expecting. So again, right direction, but I don't think anything dramatic from just the decision this week.
How sensitive are buyers to those fluctuations in mortgage rate? I mean, you know, there has been talk that the rate would need to come down to, 5%, at least have a 5 handle to it in order to really entice buyers off at the sidelines. Are you seeing that, or does even a quarter-point reduction in the mortgage rate, does that drive sales?
It all helps. I mean, it's all marginal. Right? So, I mean, a quarter point's not going to do that much for an individual buyer, depending on where they are price point wise. I'm in New York. Obviously, we've got, last year, I think it was 80% of our deals above $3 million were cash. So it's not as though financing plays a huge role here, but it plays a big role psychologically. So, even our wealthiest buyers are watching that. They want to see where the economy is going. They want to see, is that a shot in the arm for people? And what happens on the bottom of the market sometimes trickles up. So it's all important with that. In and of itself, the quarter point is not going to do much. But again, it's a matter of where it's going. And kind of giving some people confidence to come back into the market, which is needed.
The overall numbers have shown an increase in homes for sale. Obviously, the secondary home inventory are rising, and yet it still hasn't quite, gotten to that equilibrium price where it seems like it's going to really encourage a lot of activity and turnover. What are you seeing in your areas in terms of, are sellers sticking by their asking prices? Is there flexibility there?
Well, I was going to say it depends on the market you're in, right? Yeah. So you certainly see a lot of oversupply down in the Sun Belt, certain areas in Florida, even on the West Coast, there's certain places where there's too much supply. In New York, it's really almost block by block. So if you're talking about something that's a brand new condo downtown West Village, you can name your price. There's a building that's done incredibly well. They're blending at over $5,000 a foot, and they've been selling like hotcakes, doing a crazy fast few months with them. If you're looking on the Upper East or the Upper West and it's a co-op that needs work, okay, there's huge flexibility with those. So it really does depend on the product and the price point. But we've been seeing activity at all levels. It's just a question of how it's priced for what it is. It's not universal across the city and certainly not across all of the markets.